if Tesla, let's just say Tesla were to go up to $1,200 and I purchased it at $600, if it goes up to $1,200, what you think I'm doing? I'm selling. I'm selling. Yeah. Because it's gonna come back down. Yeah. You know what I'm saying? It's gonna come back down. But I'm going to sell while it's high. How do I hedge my gains? I take it, once I sell it, I put that money in my life insurance policy.
Put yourself in a spot where you're educated about your next move versus just assuming that someone else got your best interest in heart. Welcome to another edition of Be Great Podcast. Today I have a special guest, someone who is definitely doing phenomenal work, that's helped so many people and doing a phenomenal job. Today I have a chance to talk to Aunty Shakey. Miss Shakey Webster, if you wouldn't mind, how you doing today first?
I am doing wonderful. Thank you so much for having me.
Yes. If you wouldn't mind, introduce yourself to the people right quick, please, ma'am.
Yeah, so my name is Shakey Webster, affectionately known as Aunty Shakey. I am the financial matchmaker, and I help people find their perfect serve through stocks, insurance, and real estate.
Awesome. Well, like I say, I can't say enough. You're doing so much. You actually, when you walk in the room and you have that leadership about you, they call you Aunty Shakey. Now, how did you come about the name Aunty Shakey?
Oh my goodness. So it was actually given to me because it was like the way I was talking to people, I would talk to you in a way that, you know, your mama not going to talk to you because I'm going to give it to you the real way. You know what I'm saying? Yeah. So one person just started calling me Auntie, and then another person and another person. So it just kind of caught on. Yeah.
So you straight with no chaser, huh?
That's it. Shaking not stirred.
Definitely. If you wouldn't mind, like I say, just share a little bit about you. How did you, what do you do? And just kind of give a little background about what's going on with you.
Yeah, so just a little bit about me. So I'm in the financial service industry. Okay. And how I came to be in this industry 15 years ago was because back in 2007, my husband and I, we had amassed a really large amount of wealth, and we had a $5 million real estate portfolio. We were doing everything that they told us that we should be doing. Okay, I had stocks. We had a really nice stock portfolio. I had a really nice real estate portfolio, right? But in 2008, we all know what happened, right? Oh, yeah. The market crashed, the housing bubble burst, and it didn't matter how much money you had. If you weren't structured in the right way, you were literally going to be wiped away. There's a saying that Warren Buffett says that in a time of a depression, you see who's out here swimming naked. Wow. And I was out here swimming booty naked. Okay, you can see all up my crack. I was so bad, right? And so what ended up happening was I had to go back to work. Like I had to go to work. You know, how do you go from, making so much money to now you have to go working as a customer service agent somewhere, making $10.25 an hour. Mm-hmm. And that was really tough because at the end of the day, that $10.25 wasn't even $10.25. It was $7.38 an hour after taxes. Mm-hmm. And so a guy that I used to network with, he said, Shakey, why don't you come to my hotel party? I don't know if somebody has ever invited you to one of their hotel parties before, right? But like one of these hotel meetings where they gather together to, sell you something, right? Mm-hmm. And so I kept saying, I don't want to come to your little hotel party. I don't want to come, right? And so finally I was like, he wore me down. I showed up to his hotel party, but I sat in the back, okay? Mm-hmm. Sat in the back right by the door so that when they start selling whatever essential oils, Tupperware, whatever, I can just scoot on out, right? But instead, the guy in the front of the room, he was talking about how you can use life insurance to grow your wealth, how you can use life insurance to leverage your wealth, how you can use life insurance to protect your wealth. And I'm like sitting up straight, leaning in like, oh my God, because had I known about this just a couple of years ago, I wouldn't have found myself where I was today. And so I went up to the guy at the end of the meeting and I said, listen here, whatever you're selling, I'm buying. But I also need the ability to share with other people. And that started my journey 15 years ago.
Wow. And so from there, now, are you originally from here in Atlanta?
No, I'm originally from Chicago.
Okay, cool. And so now when you moved here, that's when you guys got involved with doing what you're doing in real estate and all that, correct?
Mm-hmm.
Okay. Now, are you still involved in real estate? Or are you primarily in insurance?
I'm definitely still involved in real estate as an investor. Okay. So that's why I tell people all the time, I help them find their perfect serve through stocks, insurance, and real estate, right? Because it's still important for you to have a nice stock portfolio. It's important for you to have real estate. Oh, we build a considerable amount of wealth using stocks and real estate. However, insurance is that one thing that protects both of those.
Wow.
And so now that's the reason why that's my method to building wealth, is making sure we have all three of those.
Wow. And I like that you said that, because listen to people, which I have the game cash flow quadrant. You hear from different people, they may say pick one or the other, but you teach people how to use both and how to protect it with the insurance also. So that's a good strategy to know that you don't have to do either or, but you can do it all. So, but I like the fact, and so if you can, because some people are still not understanding the fact of how this insurance becomes something that you can use as wealth. Now, we know about insurance after we die. We can use insurance to protect and look for our loved ones, but how can you utilize insurance for wealth in your lifetime?
Oh my goodness. I'm so glad you asked. Is this thing working? No. The reason why there's so many people that are out here thinking that what we've been told is all there is. If you've not been told it, typically there's a reason why it hasn't been told to you, okay? But there are some things that wealthy people have been doing for centuries now. Banks and corporations have been using life insurance to literally be a hedge over their money, okay? Like, for example, Bank of America has $20 billion in life insurance assets. Walt Disney has something like $10 billion in life insurance assets. Like, it's ridiculous amounts of money that these big corporations and banks have in life insurance assets. The reason why is because life insurance is safe, okay? Life insurance also gives you a good rate of return. Listen, with life insurance, you got your money inside of life insurance. You're right now, the 30-year average on having your money inside of a life insurance policy, your money is earning 9.25% on average. That's a 30-year average.
Okay.
There is not a mutual fund right now that can even match that. No CD, no high yield savings account, nothing. And also the money that grows inside of this life insurance contract grows tax-free. So now we're talking about 10% of growth that will never be taxed on. Okay, so that's another reason why banks and corporations use it, because of the taxes. And then the last reason is because of liquidity. Okay, everybody wants access to their money. You know what I'm saying? Would a bank or a corporation want their money all locked up somewhere? No, not at all, you know? So that's the reason why we want to start looking at life insurance in a way, not just when you pass away, but no, life insurance now is, and has been, because this is not something new. So if y'all are looking at this like, oh, but there's this new thing on the scene called Infinite Bank, bruh, it ain't new. You know what I'm saying? It's just new to us in our community. And so there's a lot of us out here that's trying to get the word out, letting people know that this is an amazing tool to grow, leverage, and protect your wealth.
Yes. And I'm glad you said that, because I got introduced to Infinite Banking a few years back. And just from my understanding, I want you to really break down, because some people still probably speaking a little bit over their head. They just know that you can make money in there, but need to know that how do you go in depth to how does this really work? So if you can't break it down to, I always say, break it down to me like I'm 3.
Okay.
So someone who's just really just not, they know a little bit about insurance, but they don't know enough of how this all works for them. So if you can't break it down a little bit more depth for them.
100%. And thank you for the question, because some people they'll listen and they'll have the questions and then they just kind of like, that's not for me. Well, it's just not for you because you just don't understand it. That's all. So let's see what type of job I can do in actually trying to, dumb it down to maybe a third third grade
There you
level.
go.
Okay. So let's just say you have some money that goes into a bank. Okay. Well, instead of your money going into a bank, let's put it inside of a life insurance policy. Okay. Now, the difference between a bank and a life insurance contract is this. One, when you put your money in the bank, what, you're going to get maybe 1%, maybe, if you're lucky, okay? That money is growing inside that account, okay? Well, you put that same $200 into your savings inside of insurance. One part of that, you're paying for the life insurance, okay? You cannot use technically life insurance as an investment tool. Let me say that again. You technically can't use life insurance as an investment tool. An investment, it actually indicates that there's some loss there and you don't lose money in life insurance. Okay, so that's one while I'm like, yeah, don't say invest when you're talking about life insurance. But the other thing is the fact that you're using this for the purpose of the life insurance and you just happen to be gaining interest on your money, okay? So you have this money in there. Let's just say you have $1,000 in there, okay? $200 of it goes to paying for the life insurance policy, which might be $100,000, okay? The other $800, or let's just say 100 because there are fees involved, okay? Let's just say the other 700 is being put into an index where that index grows. Now, the index is basically these insurance companies buying bonds and also buying options. Now, if you're familiar with options, let me talk like I'm, third grade level. With options, you're essentially buying a stock, or it's really an option, but you're buying stocks, but you can make money when the stock goes up and you can make money when it goes down. You can make money either way, okay? Now, when you put your money inside of, so that $700, there's a 0% floor, so your money is still like in the stock market, but not in the stock market. So when the market goes up, you capture the gains of the market, okay? So your money still increases. Yeah. But when the market goes down, like in 2008, the market went down almost 40%. Now, all those people that had money inside of the market, they all lost 40% of their money. But those people that had their money inside of a life insurance contract, they lost no money because there's a 0% floor, okay? So with insurance, you have a 0% floor, but you also have a cap. So there's some give and take. You know what I'm saying? Yeah. You might not be able to, if the market goes up to 23%, you're not going to get all of that 23%. You might get 15. Okay? But you get none of the losses. Okay? Now, your money's sitting in there growing. Now it's time to actually use this money to make more money. Okay? So the whole idea of Infinite Bank is to enhance your earning potential. Okay? So what you're doing, now your money's growing, it's in there doing its thing. Now I want to take some money out to maybe invest in real estate. Okay? So let's just say I have $50,000 inside of this account in which I can take out. Okay? So now I'm going to borrow, not withdraw, but I'm going to borrow $50,000 so that I can put as a down payment on this income, this income or cash flowing business or property, okay? Because I borrowed that money from the life insurance company, I didn't actually borrow it from myself. Yes. That $50,000 is still earning money inside that policy as though you never even took it out. So now you're earning money over here in this income producing asset, and you're also earning money inside of the life insurance policy. This thing is like a savings account on steroids. It's a rich man's IRA. Like
Okay.
there's so Roth IRA. There's so many ways that you can name this, but it's literally enhancing your ability to create wealth faster because you can leverage the fact that you can borrow and use it someplace else.
Yes. Yeah.
Does that make sense?
That makes good sense. And also want to add on the fact of how it increases. I know you probably can't get real numbers, but just kind of saying, so every year you put in a certain amount going into that account. So every time, let's say a month, you may have $100. It could be more than that, but it's using smaller numbers. $100 going there to that account from your checking account, getting deposited. Over time, it increases that value. If you can't elaborate on how that looks so someone can know in 5 years is how much that can benefit them.
Yes. So you're talking about the power of compound interest. That's what you're really talking about, right? The money compounding.
There you go,
okay.
yes.
What we love about money compounding, let me just break down compound interest. Gosh, who was that? Albert Einstein said that compound interest is the 8th wonder of the world.
Wow.
If you don't understand compound interest, then it's always going to be used against you. So, for example, compound interest is being used against us right now if we have, credit card debt or any type of debt, right? Because that interest compounds against us. However, compound interest flipped upside down, all compound interest is a brand new principle. Okay, it's a brand new floor. So today I might have 500. I get some new interest. It hits, let's just say I got $50 worth of interest. Now I got $550. You know what I'm saying? That I'm now earning interest on. And it just keeps growing. It keeps growing. It keeps growing.
Okay.
The only thing, we compare that to the stock market because the stock market does not compound. Your money cannot compound inside of a 401k. Okay. It cannot compound within a stock market or purchasing a stock. Okay. So that's another reason why having your money inside of a life insurance contract is so unique in that way, because your money actually can compound.
Wow. And that's the beauty of it. Now, let me ask you, how can you get to the money if you wanted to borrow? How long does that take? Is it something I got to go through a whole lot of work? How does it work?
Hello, yes. I would like to borrow $50,000 of my money. So however much money you have in there that's available to you, all you have to do is make a phone call to the insurance company. It's really that easy. And they wire that money to your account. You can have it most times in about 24 to 48 hours. That's the reason why I say it's very liquid. Now, is 100% of your money liquid? Let me be absolutely clear. No. I mean, where else can you put your money where it's still going to grow somewhere and it's 100% liquid? That's just not reasonable. But a lot of times, anywhere from 40 to 60% of your money is liquid.
You don't have to do a lot of qualification stuff like you do with banks.
There are no qualifications.
Wow.
And you're looking at a interest rate of 5% per year. Where can you get a 5% interest rate from these days? And on top of that, not only is it a 5% interest rate, but they don't care about your credit. They don't care if you don't have a job. None of that. If the money is there, you can take it out. No questions asked. Okay. I was gonna say something to that, but and on top of that, if you return the money before the anniversary date, so before 12 months, they don't charge you anything at all. So you can literally borrow that money for 11 months, return the money back into the policy, and you not get charged anything. Where do they do that at? Nowhere.
Wow.
And then people ask me all the time, well, if I borrow the money, do I necessarily have to pay it back? No, you don't. Now, you earn more money if you pay it back. However, the only reason why you earn more money is because you don't have to pay the 5% interest per year, okay? But if you pay it back or you don't pay it back, if you don't pay it back, it's collateralized against the death benefit. So, I'm going to tell your listeners a little secret. Okay. Is it okay?
Please do.
Okay. I want y'all to know that we're all going to die.
Oh, yeah.
We're all going to die one day. Okay, just in case there's somebody out there that's like, I'm gonna live for the rest of my life. I've never been told that I'm gonna die. I'm letting you know today you will die one day, right? We don't know when, but we will. But if you happen to pass away and you have a loan out, then whatever amount you have out, let's just say use that $50,000 again. Let's just say you have a death benefit of $250,000, then that means your family's only gonna get $200,000. Mm-hmm. That's basically what that means. And if you have a problem with your family being left $200,000, listen, this cash value life insurance policy is not the only life insurance you're going to have. This is not your policy that you're going to leave behind a mass amount of wealth for. That's not what you're using this for. That's what we're going to use other policies for. Excuse me, myself, I actually have 6 of these type of policies. 6 of them. Only because each one of them have a certain purpose. I have one that's for my retirement. I have another that's for my real estate investment. One of the things that I do, you asked me, am I in real estate? Yes, I'm in real estate. I have trauma from the market. I don't necessarily want to be a buy and holder nor a fix and flipper anymore, but I still want to be in the real estate game, but I want to be in it as an actual lender. That's what you can do with these type of policies. You can become now a lender. So if somebody were to come to me and they say, hey, I need $50,000, for this particular deal or whatever, where do you think I'm gonna go? I'm gonna go right to my life insurance policy. I'm going to allow them to borrow that money at a fee, okay? I charge 20% for a year, okay? They gotta have my money back to me though within a year's time, okay? So if they don't return my money in a year, what do you think happens? I get the property. The property is actually more valuable to me than the 20% return on my money. So there's no losing situation. You know what I'm saying? But if they do return my money, then that means I made 20% off of that money. And then on top of that, if the index hits at 10%, I just made 30%. A 30-cent return on that same piece of money, on that $50,000.
That's good.
we gotta get creative in this game, even when it comes to not taxes, but stocks. I told you I love stocks too, right? We talked about real estate. Let's talk about stocks for a second. If Tesla, let's just say Tesla were to go up to $1,200, okay? And I purchased it at $600, okay? If it goes up to $1,200, what do you think I'm doing? I'm selling. I'm selling. Because it's going to come back down. You know what I'm saying? It's going to come back down. But I'm going to sell while it's high, okay? But how do I hedge? How do I hedge my my gains? I take it, once I sell it, I put that money in my life insurance policy. When Tesla comes back down and I'm ready to buy again, I'll borrow the money from my life insurance policy and I will buy some more shares of stock. We have to really think about and get creative. You and I, earlier we were sitting in a conference and, Dave talked about how sometimes we need to sit and just think. And oftentimes when it comes to our money, we don't just sit and think. We don't have to, because we have a government, we have a educational system that literally tells us what to do with our money. They tell us how to move, how to go through life. They tell us as soon as we get out of school, go to college, get a good job. They tell us to do all of that, right? But then when we get this good job, we need to participate in the 401k. 401k is trash. Let me say it right here, right now, so you are not confused. The 401k is trash. You don't want to believe the government is giving you healthy food. The government is... When have we trusted the government for anything? And now all of a sudden we're trusting the government with our retirement? During the times when we need our money the most, we're going to put our money into a government executed program? Nah, I'm good on that. I'm good on that. But they did a really good job of ushering us like sheep for the slaughter, of ushering us into exactly what to do with our money.
Yeah.
And so now when we do something different, or when we try to teach other people different things to do with their money, they're looking at us sideways. Not very trustworthy, but it was all part of the plan.
Yeah.
It was all part of the plan.
Yeah. And so I want to kind of recap on that, because some people may have been over their head because that's all they ever known.
Yeah.
So they don't think anything further than what they've been told. But if you really take the time and look at it, you just putting the money still going towards the stock. And if you pull it off withdrawal early, you're going to have fees and penalties against that.
Yep.
And then the only way to get that money, once you leave that employer, then you got to transfer it into IRA or some type of way. So it's so many different things that you don't have to say so on what your money doing.
No
Even
control.
though you see the fact that the employer is supposed to be matching your money, but is it really as beneficial to you as it seems to be?
Steven, let's talk about
it.
Let's talk about it. Wait, how much time we got? Wait.
We'll give you a few more minutes to go into it about it.
You know, because I'm talking to somebody. I know I'm talking to somebody because there's somebody that I hear this all the time from my clients, and I'm kind of helping them to roll out of the 401k plan. And I always hear the objection, but my company doesn't match. My company, I can't give up the match. I can't give up the free money. Let me go here. When you're talking about, let's talk about real estate. When you're talking about real estate and equity inside of a home, equity inside of the home has no real rate of return until it's realized. Okay? So if you own a home, and that home you bought it at $100,000 and it now goes up to $200,000, and you get excited and you're like, ooh, my house is now worth $200,000. Okay? Yeah, okay, well, what does that mean? Because the next year it can go back down. Okay? Because you've not realized the actual equity. So there's no rate of return there, right? Likewise with a 401k, when you say this free money, okay, technically it's not any money because you've not realized the gain. If the market goes down, again, almost 40% like it did back in 2008, I don't give a damn whether or not they gave you, they matched you 100% or 120%, you still lost money. You lost your money and their money. Okay? Now, if there are some gains, you have to look at it like this. Now you're in a different tax bracket. So now they are now taxing you at 32% when you retire, because now you have this employer's money added to so you're going to pay for it either way. And that's the thing that, again, we're not sitting back and thinking, because if I had only put my own money in there, I would be paying less taxes. All you're doing is giving the government back what the company had already given you.
Wow. So you're saying the comparison between the two is you're not taxed on the money that you receive when you do an infinite bank, but you're taxed over here with the IRA?
Oh my God, yes. Heavily. That's the reason why your 401k plan, or you should be creating your own pension plan. That's what I'm teaching people to do. Create your own pension plan. Instead of the money that you're giving to your employer, put that same $500 into cash value life insurance policy so that can grow. You have access to it anytime you want. It still grows at a great rate of return and is growing tax-free. Right now, if you put in a 401k, the taxes are deferred to a later date. I tell people all the time, I'd rather dance with a devil I know than to dance with a devil I don't know. I don't know what taxes is going to be like in the future. I know what they are today. And I know that with the Trump rollbacks, when they actually roll those taxes back, our taxes are going to inflate. We take for granted that, right now, we might be in a 28% tax bracket or 30%. But there was once a time where the tax brackets went up to as much as 48%. you do realize we can get back there. We can get back there. You don't know if that's going to be your situation when you're ready to actually retire. That's a scary thought.
Yeah.
When now I have no job, I have no regular income. Oh, well, some people are like, well, I don't have my Social Security. You better hope.
Yeah.
There's no guarantee. Where is it written in the Constitution where you have to get Social Security?
Exactly. Well, like I said, the thing that I got from our conversation here is put yourself in a spot where you're educated about your next move versus just assuming that someone else got your best interest in heart. And so if you can, I want to let people know, how can they get in touch with you if they wanted to connect with you?
Yeah, so how you can get in contact with me is several different ways. You can hit me up at thefinancialmatchmaker.com/wealth. That's one way. I'm also on Instagram at Aunty Shakey, AuntyShakey. You can hit me up on Instagram or actually all social media platforms as Aunty Shakey.
Awesome. If you wouldn't mind, give us something that you may even say to yourself or you tell others about something that they encourage and keep them in the spirit of moving forward in the lane that you, what would you encourage people with?
I would encourage people with this, and it's something that I say all the time, that a lack of discipline will have us praying for miracles. The reason why I want to say that, and that might not sound so encouraging, but it is. I just want to encourage you to be disciplined. I want you to be disciplined not only in what you eat, what you drink, what you put in your body, but how you spend your money. Because everything you do with your money matters. I say this all the time, it's in the opportunity cost. Whatever decision I decide to do with my money or any decision I make, I'm giving up something else. So if I'm sitting here talking to you, having this amazing conversation, I was also tempted with, hey, let's go out to eat. Now, if I chose to go out to eat versus sit here and speak with you, what's the opportunity I would have given up? I want people to think in that way, and I want them to be disciplined enough to be able to think about the opportunity cost. Am I going to spend my money brunching every Sunday? Or am I going to spend that $50 or $75 that I spend on brunch? Am I just going to put that away into a cash value life insurance policy, or am I going to invest it somewhere? So that's what I would encourage people to do, because this is the time. There is no better time than right now, in this moment, to create a millionaire out of yourself and leave an amazing legacy for not just you, but your children, your children's children. So that's what I would say.
Awesome. Well, I think you definitely said it. You said it very well, and I hope you receive something from what she just shared with you. If you are looking to learn more about the industry of insurance, stock, and also real estate, please tap in with Miss Aunty Shakey here. She's definitely got the information. Also, she has the wealth of knowledge and experience to help you get exactly what you're looking for. So if you like what you heard, please like, please share. Also, be great. Thank you for tapping in.